Mehran, big news today.
Big news it is.
By the way, nice looking suit. I hope this isn't harassment.
Thank you so much. You've lost a lot of weight, by the way.
Thank you so much.
We're both in a lot of trouble.
That's right. Hello. So anyway, Ben Bernanke.
Good way to start, by the way.
Yes. Ben Bernanke announced today.
Yes. Well, this was a much anticipated announcement. The market had pretty much anticipated there was going to be something big, and it was. QE3 was pretty much announced. It's a very, very big deal.
Quantitative easing 3. This means they're going to rev up the printing press.
Yeah, for years they used to just lower the Fed funds rate, lower. When it went to 0 to 0.25%, there was nothing else to lower. So they had to do what's called quantitative easing and buying bonds and pushing yields down artificially. And that's what they've been doing with QE1 and QE2.
Now a big announcement.
But now, big announcement is QE3.
And this thing is not, there's no limit on this. They're saying we'll just do whatever it takes.
It's pretty amazing. It's pretty amazing that they didn't put, it's an open-ended situation. $40 billion of purchasing of mortgage-backed securities on a monthly basis, open-ended, where right now they're buying about 20-some billion.
So they're doubling
So
it.
It's pretty huge.
What does it mean for the average person?
What happens is when you go to do a loan, that instrument is pulled together with other loans that are done. And then they're sold off. They're, Fannie Mae, Freddie Mac is behind those. And what happens is the government and private investors can buy those bonds, mortgage-backed securities, those loans basically. So what happens is that if the government comes in, or if the Federal Reserve in this case comes in, there's a blurry line whether they're government or not, you know?
Yeah.
But when the Federal Reserve comes in and purchases that much, it reduces the supply dramatically. All the supply that comes to the market from the refinancing, purchase loans or whatever is being sucked up. Big buyer comes in. Whatever there's a big buyer of you can actually lower the yield. Okay, so if
does this mean that interest rates on mortgage are actually going to go down? They've been historically low.
Actually, it's hard to imagine it going lower, but it's possible. It is possible. It all depends because it's a two-edged sword. You can only go so far. Part of the problem is inflation, and we saw that in the PPI.
Right.
So what happens is if inflation picks up by the printing press going at full speed, it's going to drive up a lot of prices of everything that's tied to the dollar, and the dollar weakens.
Do you think we're on the edge of that happening? Because it hasn't happened in QE1 or 2.
Yeah, it's very interesting. It hasn't happened yet, and a lot of it has to do with how sick Europe is. So we're the less sick patient of the two.
Yeah.
And that's allowed us to borrow so cheap. But this is big news, which means for the foreseeable future, it's really hard to bet against the Fed, meaning that they're probably going to keep mortgage rates low.
Mortgage rates low.
Possibly go a little lower, but there's not that much room.
Now's the time to buy, is that it?
Now's the time to buy, now's the time to refinance. There's no ifs and buts about it. Absolutely.
Mehran Aram. Now, you mentioned the PPI, the Producer Price Index, has gone up 1.7% in the month of August. Now, annualized, that's over 20% a year.
Huge.
This is a bad signal.
It's a very bad signal, and there's more to come. However, usually, if you look at all the previous months, the next set of data that's going to come out is the CPI. Usually it's followed a day or two later.
Consumer Price Index.
Yeah. Usually CPI is like, oh, the news is not that bad.
Yeah.
The reason is that the companies are having a hard time passing that on to the consumer during recessionary times.
The previous month, it was 0.2%, which is only like a 2% inflation rate.
But that can only last so long. There's a point at which companies say, I can't make money. There's not enough profit margin. I'm going to have to pass it on to the consumer.
Aren't we already seeing that in the supermarket?
Well, yes, we are.
And cars and all kinds of other things.
So that's why we joke with our clients is, well, there's no inflation. We agree on that, right? But, except
prices
for
are going
food
up.
And gas and everything else that we really spend a lot of money on.
That's true.
We've already seen a lot of inflation in those areas.
That's amazing. All right, so now, not only did the Producer Price Index showing a huge inflation at the producer level, at the manufacturing level and so forth, but you also had a study out today that said the number of people in the so-called lower class, at least economically, has dramatically increased. Almost a third of all Americans now find themselves and I self-identify as no longer being in the middle class.
Yeah, well, that's happening. And, the economic malaise is continuing a la Jimmy Carter years almost. There's a lot of similarities here. And I think what the Fed said, what Mr. Bernanke said is right on. The Fed cannot solve this problem. Other offices have to kick in and do something.
What do they mean by that, do you think?
Well, what they mean by that is the Congress and, the President, they have to do something about it. Really, what we have needed all along was a pro-business agenda. What we don't need is bashing one industry after another, and then wondering, why aren't they hiring more?
Yeah, why aren't they
I mean, it doesn't take a genius to figure out that if you keep attacking people, they're going to feel insecure about hiring.
Duh.
Pretty easy.
In the short term, however, the good news is that the Dow Jones Industrial Average is
Yes.
up by about,
200
200 points or
Yeah.
something.
Well, you know, that's again artificial, but you know, doesn't matter. It's going to show up in our statements monthly, and that is the good news. But that's traditionally been done to prop up the stock market.
Absolutely.
I'm not in favor of this move, but you know,
It's
a lot
there,
of people are going to benefit from
and
it.
you're going to
Let's
tell
take
us about
advantage of
it.